Okay, hi there, traders. Welcome to Friday's market wrap up by Bretton Financial Trading Academy, BFTA. My name is Kenny Simon. Today is the 16th already of April 2021. So we have got a lot of things to actually discuss, but we'll have this webinar to be a rather short one, so we can reserve the time for the ones who are fasting, especially in this time of Ramadan, as well as all the other religions as well, as I know are going through fasting period as well, especially for the Orthodox Christians, as well with Easter coming and various other things. So it's a period where I think recorded webinars, recorded versions are going to be more useful as well in terms of the timings of people as well. So let's just get to the website as well. Bretton.institute is the website, and you can register, sign up for free, and do look up on the webinar section for the upcoming webinars as well. That's really important. And the webinars are also part of the mentorship program. And with the mentorship program, we've also got various other interesting elements to the website and the whole program that we actually offer. So the subscription is something that you could actually consider, and we are looking into getting more elements to be added into the membership area. So do check out our website. Also, you can easily go on to Facebook as well as our YouTube channel. Okay, so with that, I want to start straight away with our analysis as of today. Just a wrap up of the week. It's been quite crazy in a way, meaning that as of yesterday, we have seen gold just risen quite drastically as well, and we have seen a very big move in gold and various other currencies as well, but mainly it's due to what's going on with the bond market, the yield, the US Treasury yield, if I'm not mistaken, the 10 years US Treasury bill has actually, the yield itself has actually dropped, so that has increased the need for safe havens like gold. But number one, but with that as well, with that drop of yield, the US China and US Russian tension has actually gone higher as well as of late day before yesterday, Thursday night itself. They've got some a lot of words has been exchanged about Taiwan, so there's a lot of tension going on in that area. So gold itself, as you can see, this is on the weekly chart itself. If you go onto the 1 hour excuse me, or the hourly chart, you can actually see that it's increased quite a lot, but now it's making that turn back round. So we want to take a look at what are our potential trading opportunities as of next week itself, and we want to wrap up the week in looking at what are the conclusions, what are we supposed to actually close out or not get into, and things like that. Okay, so before that, very quickly, we want to also go on to the Action Forex heat map and also the Forex early warning heat map. So on the Action Forex top movers section, just to give it a bit of an idea of what investors and traders are looking at, there's a lot of Australian pairs that are actually focused on, but it's focused on Australian dollar selling the Australian dollar versus the other currencies. And at this moment of time as well, with AUD USD specifically, we need to take a look at it technically as well, to look at whether or not that head and shoulders pattern that has been mentioned by majority of investors and traders, all the experts out there as of last week, 2-3 weeks ago, even from last month, they've been already alerting that head and shoulders pattern, and it was quite close already with the breakout point, but it has already broken the neck. And then we want to look at the progress with that on knowing whether or not we can ride more downtrend or more selling for the AUD USD, because is not an inverse head and shoulders pattern, but it is a normal head and shoulders pattern, which usually signals more downward pressure or more selling opportunity for the AUD USD in particular. So it doesn't mean that AUD USD has got a head and shoulders pattern that has actually happened, progressed quite well the whole week, and then you want to sell all the Australian dollar pairs. No, we need to look at it, on a personality one-to-one basis, and each one of them, each one pair, whether or not it has Australian dollar in it, has got its own personality, and it has to be dealt with or traded differently. Okay, so that's for the top movers. As we can see, we've got the number one GBP CAD, and then we've got AUD CAD and NZD CAD as a top three out of all the 10. But we've got a clearer one in terms of trend, which is the one that has 4 dots, meaning that it's giving a little bit of clarity because it's got dots in all the 4 time frames, starting from 4-hour chart right up to the monthly chart, and that is for NZD CAD. So the NZD CAD is also showing signs of downward pressure, okay? And that's why we've got the negative symbol right here, showing us that majority of traders, investors are preferring selling off the NZD as opposed to the CAD. Okay, so we can also see that majority of pairs that has got CAD has got buyers for the CAD, so that they are selling the other currencies versus the CAD. So this is giving us a little bit of a hint that CAD, being a commodity currency, is on the upside as of today. So we want to look at the currency heat map that's available on actionforex.com. It's free. We've got various tools as well. So for all the tools that you want to look at, you need to click onto markets, and then you can get tools such as the top movers, currency heat map, action buyers, and various other volatility charts. But we want to focus on just a few, especially the top 10 movers, and we want to look at the currency heat map and the action buyers as well. But if you are looking at a specific pair and you want to know a specific currency, and you want to know the volatility of it compared to other currencies and how you pair them with other currencies, how volatile it is, then you can actually take a look at the volatility chart. For those who are very much into support resistant levels, demand and supply, as well as pivot points, you can actually take a look at pivot points right here, and you can actually use the ones that you are most familiar with. And I'm most familiar with the Fibonacci pivot points. So they're not very far away from each other, but then it does actually depend on the strategy that you apply as well, and whichever strategy or tools and indicators that you are most comfortable with. So those who are very comfortable with Fibonacci, for example, and it tallies with their own strategy, they would prefer the Fibonacci pivot points. Okay, so there you go. So these are what's available on Action Forex here and the tools that I use. But let's take a look at the FX heat map. Now, the heat map itself, as you can see, we want to look at the generic heat map table, and you can always choose either the 4-hour or the daily, or go even higher, weekly and monthly. Now, from what I can see, if we go on to the 4-hour chart, we have got more columns that are either dark red or dark blue. But when we move into the daily chart, then it starts to fade a little bit. The strength of the trend starts to fade. So we can then say that whatever that we're looking at here, if it's for the 4-hour chart, we're actually literally looking at 1 hour to 4 hour. If we are looking at daily chart, we're actually looking at 4 hour to daily. It's like you drop down one time frame to look at it. Okay, so here, for example, when you look at 4 hour, that actually means that this table could potentially be for the shortest term, not for the longer mid-term or longer term. So as of now, anywhere between 1 hour to 4 hours time, this is what we could actually expect in terms of trend. Now, here for the USD, as you can see, most of the other currencies are bullish against the USD, which basically has given the rise in gold because USD is really weak. So then if we are looking at CAD, now CAD, within this short period of time, we may be able to find some trading opportunities within 1 hour to 4 hours time, let's say, and it's mainly bullish, the CAD. Okay, so because this has got a very nice dark red column for CAD, which basically means all the other currencies are much weaker than the CAD. So CAD is proving to be quite bullish, okay, or strongly bullish. So if we go on to the CAD predominantly, onto the CAD itself, as you can see, it's not looking as such yet, okay? But if we look down on the AUD, we have got AUD really strong or really bullish against the GBP. So GBP AUD may be a little bit of a hint there that we can actually take a look at GBP AUD as well. But I want to go through some key pointers to wrap up the week in terms of certain pairs that we have been looking at. And I want to look at gold as well. And if you guys have got any questions, feel free to ask. Okay, so let's get to the action bias as well, just to get a bit of an idea what's going on with the currencies and the currency pairs. As you can see, I like to look at on the action Forex action bias side of it, I like to look at the whole row, okay? So the whole row needs to start off with the first row and go all the way on all 4 columns to actually have either an arrow up blue color or an arrow down in red. So here we don't have a nice starting point of trend. We always have like we are having a breakup of it. So we've got Euro JPY, let's say up here, and then neutral, and then we've got one on the weekly. So it's not in sync at the moment, and it's not a nice one to look at. If you want to look at a pair that has potential, it's probably best to look at the trend starting from the 1 hour right here. And then you've got, let's say, for example, an arrow up, arrow up, arrow up here, up to about daily and consecutively. Then that matches with the heat map as well. Then you've got a good indication. But at this moment of time, there's just no clear indication of a good pair at this moment of time following the action bias. But then we can always double check and go on to the Forex early warning heat map as well, just to look at which pair or which currency crosses would actually give you more room to consider it. And when you look at a lot of long bars, and that actually indicates high volume and interest. So here, for example, I wouldn't be looking at all the USD pairs for now because we have got a little bit too many pairs that has got very little participation, very small bars. So that actually shows that there's lack of participation and interest in trading that pair. So we don't want to go into a pair that has maybe very low liquidity as well. It will be very risky for us. So we want to look at pairs that has got all these longer bars like this. So this area right here is the Asian session, and then we've got the European session. So here it's telling us that we may want to look at GBP pairs much better than looking at the other ones at this moment of time. So maybe once London opens and then you've got the US open later on, then you will see things may actually change and you've got participations, liquidity goes into different pairs differently. But as of now, it's a little bit on the lagging side of it, meaning that lack of participation in the other pairs, but not for GBP. So for GBP pairs, we are seeing a good participation, and we're looking at more participation in the selling of GBP pairs. Okay, so here with the GBP pairs, what we can then do is look into, go back to the action Forex as well. You can go back to the currency heat map section, and you want to pay a little bit of attention to the GBP pairs. So when we go on to GBP specifically, then we can see that from 4 hour to monthly, yes, it is showing more bias to the downside for GBP. Then we have got sort of a nice column with more dark rates for both euro and AUD. So what you want to then do is you want to write down GBP, AUD, as well as the Euro GBP to actually then look at the trend from a technical and analytical point as well. So we want to look at that. And if we go on to the financial source, which is my portal for fundamentals intermarket analysis as well, just on the news side of it, just to look at what we are actually expecting. This is as of 1 hour ago. So we have seen that in Asia itself, I think it has actually gone down in terms of downtrend with equities, with stocks and all that, because it usually correlates, connects to what happened in the US. So with US experiencing the downtrend and bearishness, it has actually gone on to the Asian equity markets as well. That's why it was cautiously mild because of the US. Then Chinese markets seem to be quite choppy as well. So when we talk about Chinese markets, we want to connect it with Australian dollar and New Zealand dollar. So hence the reason we are seeing a lot of downside movement as well, blowing from the trends in China into both Australia and New Zealand. So Chinese GDP, industrial production, also said that they are disappointed with their results and their outcome of numbers. So that again would give more room to the downside. So hence the reason we want to look at AUD. AUD pairs, but not necessarily AUD USD. Why? Because we have got both AUD and USD are on the weak side. We don't want to go into pairs that both are weak or both are strong. We need one that is forecasted to be strong and stronger, and the other one to be weaker and weaker. Okay, so then it would actually be a better match, or better to pair them up together as a trading opportunity. Okay. Now, coronavirus-wise, it's also having some negativity or negative impact, even in the US as well as UK and the Eurozone. Let's just check. We have got an update of coronavirus right here on US. It does actually see a little rise in deaths as well as the COVID-19 cases. So both deaths caused by COVID-19 and the cases on a daily basis as well has actually risen. But the total vaccine dose at the moment, 198 million, which is basically an increase from 195 million. So that is on the good side of it, but still they're battling with the daily coronavirus cases. Okay, so let's take a look. Okay, in Asia, including Australia, Japan's Shanghai Index, Hang Seng Index, they're all recovering at the moment. So from that point, when we see that it may actually recover, that actually means that we are looking at the Australian dollar as well to actually rise a little bit. Whether there's a correction or not, we don't know, because it has connection with the Chinese side of it market. But here it's talking about Southeast Asia minus China more on the recovery. So mainly Japan, you know, and countries like that, even Malaysia, Singapore, it is actually a little bit better. It is recovering as of now, but then in terms of the stocks and all that, has actually dropped because of the US as well yesterday. So that side of it, we want to connect it with what goes on onto the chart as of now. So let's just quickly go through a couple of other news. With regards to the UK, it says here, UK Prime Minister is reportedly hoping to use his visit to India. So to actually talk about the trade agreements with regards to reducing tariffs and all that kind of thing. So that is to look out for, but I don't think it will impact too much as opposed to what's going on already in the UK. So That's important for us to look at. FX market, DXY stands for the US index. It says that it marginally gained. So again, it is actually recovering the US. So that actually means that we need to look at gold as well, whether or not there is a correction of gold. Gold has risen quite a bit, but then we are looking at a bit of a correction at the moment, and that might actually match with what we are saying now about the USD index. So the USD index is a collection, basket of 6 currencies and against the dollar. So the dollar against all these currencies. So if the DXY or the US index is actually on the upside, that basically means that the USD is on the upside as well, okay, or expected to be on the upside. So commodities wise, now commodities, let's take a look a little bit. Now we've got the Western Texas Instrument right here, US oil, in other words. It says that it maintained its level at the 63.50 area. We'll take a look at both UK oil as well as the US oil. With regards to gold, it was trading in a range bound. So range bound meaning that doesn't mean it's necessarily on a sideways only. It could actually be a range slightly up, a range slightly down as well, or like a channel, okay, to go down or up. But then it does actually look like it's creating a channel of price that it's capped in within a price range. Okay, so it does actually say it's a bit restricted at the moment, and it says greenback USD has actually improved or recovered at the moment. Now copper prices were actually flat, as it says right here. And then we've got Chinese GDP and all the other ones here. Okay, so that's basically it roughly. Biden basically is looking into fixing all the words that he has actually uttered as well about Russia and all the things about China as well as with Taiwan. So yeah, I think this would actually go on over the weekend as well. So we want to actually look out for news with regards to all these geopolitical issues that is revolving the US, China, and Russia. Okay, so that may actually then give us a bit of a hint of what we may expect. But the good thing is that we may actually expect volatility. That's important. Okay. Yes, we will take a look at the US oil and UK oil for sure. No problems. So it's probably a good time for us to go into the chart and take a look at oil straight away, actually, because this geopolitical situation that goes on relates very largely to oil as well, because we are talking about oil producers and oil buyers here, especially China is a number one importer of oil, but then we've got number one producer or exporter of oil being Russia. So then it may definitely have some impacts on that and commodity in general. So this is for gold right here. Let's just switch to oil. You've got the US oil right here. Now let's take a look at oil and look at it from a technical perspective. I just like going to the shorter time frame first, just so that we get a bit of an idea of what is happening now within the next hour to the next couple of hours. We can see that it is actually on a fairly bullish run, fairly bullish, not very, very strong, mainly because of the way the three lines are actually moving as well. It's moving up, it's moving, and it's moving separated from one another. But if you take a look at the number of candles that are really short, and then you've got loads of we want to look at where the wicks are pointing towards, if the wicks are pointing upwards or downwards. So we've got wicks pointing upwards as well on the 30 minutes chart, and then we've got it going into a little bit of a range. Now we can see that the three lines are going upwards, but when you look at all these movement of candles here, it does look like it is creating a little bit of a sideways. So we need to compare the 30 minutes chart to the 1 hour chart, and then you want to take a look at what really is going on as well. Now, still is biased to the upside, but we are looking at the $63 .74. So it It looks like it does actually respect the psychological level of 80. 50, 0, 0, 20, and 80 are the psychological numbers that I apply onto Forex trading together with the geometric trading method. But I see that it could actually be applied to the to oil as well, and I've seen that quite a bit. As of last week, I've just done a little bit of an experiment, and I see that all the retracement of price, whether from the upside down or the downside up, seem to be respecting some psychological level. So the psychological level is after the dot. Okay, so after the dot is 74, let's say 74 will actually be very close. Going upwards, it will most probably meet the 80 psychological level. So we want to, let's do a little bit of an experiment here as well, just to show you the reaction of price of oil towards the psychological level. So 64.80 is your psychological level up above the price. Okay, so 64.80. Okay, so I put that one up there. So your 64.80, oh, sorry, 63.80, not 64, 63.80 is the closest one. Now we are correct. And downwards would actually be the 63.50 psychological level. So right now the price is just simply in between the psychological levels as well. So 63.50 right there. So we've got it there. Now, if I zoom in a little bit, now this is still on the 1 hour chart. So we want to take a look. So as you can see, it's quite interesting that you've got the resistance right on the dot. This one here, right on the dot. It retraced on the 63.50. And then now we look at it, opening price coming down, retrace as well at 63.80. So that's really interesting. So if I were to put this one here, I just want to capture loads of other prices as well here as a support. And I can see that it's at 62.75, which is again really close to 62.80. So I'm just going to draw the 62.80 as well. Okay. What I'm trying to do is to look at where the whole range of price is for oil at the moment. And then if we also consider all these ones here, that's 62.58. So I want to also just consider the 62.50 area right there. So now we've got a range of all these prices right here. So then I can encapsulate them with this triangle tool, rectangular tool right here, sorry. And something's wrong with the tool. Give me a second. There we go. So it is from 63.80 right down to 62.50 would actually be that price range right there that I would see it as no trading zone in a way, mainly because it's just playing about that range at this moment of time. So anything under or above would then clarify its direction in a way. So if it breaks downwards more and more, and then maybe it would retrace upwards, but then come back down, then you know that the bias is to the downside. But at this moment of time, looking at how it's actually moving, it might play about a little bit here, depends on what's going on fundamentally, geopolitically as well, depending on all the agreements that's going on as well with regards to oil. So news factor, geopolitical factor, fundamentals are more impacting the US oil as well as the UK oil, or the oil in general. Okay, so here, as we see it going sideways, it is still regarded as an uptrend for oil, mainly because of the way it has actually moved so far. But we need a confirmation of the uptrend only after it actually breaks out of this blue zone. That means going above 63.80. Now, if we go back here, let's just, and we look at, let's say, a drop from this point downwards, we can see that the opening price 61.44, very close to 61.50, but then the top price there before it went down was at 61.71, which is 9 pips away from the 80 psychological level. So then if we go downwards and then it just fall here, and before it risen up, the opening price is at 57.71, which is again 9 pips away from the 80. And then here it's 57.60. The opening price matters quite a bit as well. So 57.80. And I see that, I mean, from looking at both UK, US and UK oil, I see that the number 80, the psychological level 80 and 50 seems to be most respected in oil. And it's got a lot. It's not to say that the 20 and 00 is not there. It is there as well. But then the major movements for oil, the big ones like the fall from there to there, and maybe a rise from there to higher up, or whichever has got a very big momentum price with big candles moving upwards after the reversal, big bullish or bearish candle usually happens at the 80 and 50 psychological level. Okay, so here, for example, we see it there as a pin bar, and we can see that that one there is at, again, only about 4 pips away from the 80 psychological level. Here it risen up at 59.49, which is again close to the 50 psychological level. So I see a lot of 80s and 50s. So I think for a break of price, for oil to go up, I think for us to understand whether or not it's wanting to make that break is to look at whether or not it gone above the 63.80, at least up to the same way that we would actually be trading currency 63.90 and above. If it does actually reach 63.85 and then going towards 63.90 with a strong bullish candle, then you know that this is what it wants to do. This is what the market needs to or wants to actually do, is to go up. So at this moment of time, it's a case of waiting a little bit, because we will have a gap as well, and a gap in oil, you know, it's very significant. So you want to be very careful not leaving your trades open and just hoping for it. So it's probably better to either do a pending order, or you re-enter the market again fresh and new on Monday onwards, just after you monitor the market for oil. But it's actually quite good to actually just look into psychological levels as well, price action, and then look at patterns together with that. So here, for example, with 63.80, if we look at the 4-hour chart, or let's go on to the daily chart for oil, we can see that if it wants to push higher from the most recent bullish candle, yes, it could move higher following a single bullish mother candle, and that's the one here, above 63.80 and above right there. As you can see, you've got one single bullish mother candle. So you can actually look at the closing price right there. I'll color it differently in yellow. Okay, so here you put as yellow right there, and you can see that it does actually have the potential to go up to the $66 value. Okay, so the $66 level right here, is the closing price for that bullish mother candle, which is the most recent and as far as the eyes can see. Now, the good thing about this candle right here, it's also closing where all the other most recent candles have actually closed as well at that before it actually went down. So it gives you a little bit of hint that maybe, yes, there is a room for the upside for oil. So we just need some catalyst, something to push it fundamentally, news, something like that, to actually push. Technically, it has the room, but it needs the fuel coming from fundamental side of it to actually push that forward. Okay. So then, as you can see, this is really an interesting one because we've got potential, yes, up there, closing of the mother candle. But again, that closing of mother candle actually also shows that you shouldn't be overexcited in buying above the 66. So $66 is sort of a bit of a limit at the moment to actually consider buying. So you want to buy up to about 60, 65, $66, and then you need to exit. If not, we might actually face some trouble in terms of reversals. So here, as you can see, loads of reversals right there. And we've got more bearish candle that are able to pull it down much more. As you can see, bullish mother candles dominate this area right here, okay, under the 6250 area. So 6250 and under, we can see more movement of price to the downside. So you can see all the movements of downside are more powerful and much more swimming all below this level here at 6250 and under. All the upward type movement has not been as strong as the downside movement beyond this borderline. So all these red lines that we draw, and it can be a zone that becomes like a borderline between the bullish area zone and the bearish area zone. As we can see, bearish area zone sort of predominates as well, because you see how high has it actually gone. It's not as high as how much it has actually dropped before beyond this line, okay, under all these red lines, especially that acts as a border. Okay, so there you go, or the zone. So yeah, that I hope gives you a clearer picture, Mr. Kunan, on the oil side of it, especially the US oil. Okay. Yes, this is an official one as well, the EIA website. Not too bad, but all these ones, sometimes what happens is that it gives you the news, it gives you the fuel of it, but you still need to match that up with technical. And you need to match that up with technical and fundamental, because technical will give you the indication of where it is visually safe to actually buy. Oh, you've got a resistance there, you've got mother candle there. So that gives you a little bit of a control over your emotions and all that on the technical side of it, if you follow it, of course. But then the fundamental side of it, yes, that's a good website to actually use on the fundamental side, or just to get the ideas, but you need to match that up with the technical side of it as well, because your technical side of it would actually help you also plan your entries and your exits on in terms of the timing of it, because the news can actually be released with any sites like the one that which is a good site you recommended or showed us, shared, and it's a good one. But the problem with that is that how you dissect that information into exact timing of entry and exit. So you need to actually match that up always, because some traders, what they do is that they get very excited with the news on fundamentals, right? And then what happens is that, of course, the websites or even that specific source of fundamental is good, but it's not going to give you the edge of planning your entry and your exit. It can give you the news that, okay, it can move so much and it moves so much following the news, but then where do you exit and where do you enter is very, very important, because that's where your profit is determined, is how you actually exit the trade from the entry. Because entering it, you can enter it right now when the news is saying, oh, it's something happened, and then you look at the chart, wow, it's amazing, it's really has risen from the positive news in the website. But then where do you actually exit? Because your exit matters more in terms of your profit, because all that you see that you have entered successfully, because you have entered following the trend that is successful, that is going on at the time. But then because you have not planned technically as well where the resistance are to the left, you have not planned your exit, and all that profit will turn into losses as well if you have not exited properly. Okay, so that is why it's very important to mix and match between the sentiments analysis, fundamentals, and technical, just to get a little bit of pointers here and there to give us clarity and to give us synchronicity. All the elements from all these are like ingredients, and the right amount of ingredients needs to be put there so that we get a clearer picture. Then we decide to trade and then plan your entry price, exit price, and your stop loss as well. Okay, so there you go. Good. That's a good site, definitely. All right. Okay. It's how we use the sites as well, the resources. 50-80 technical most of the time. Yes, that's good. You mean price-wise, yeah? Price-wise, yes. It's proving to be quite sensitive for oil on the 50 psychological number and the 80. 80 seems to be giving more accuracy in terms of bigger price changes, bigger reversals as well, both 50 and 80, but 80 seems to be dominating it much more as well amongst these two. Okay, 0-0, I don't see it happening so much for oil. So that's why we need to actually experiment and understand personality types of pairs as well, instruments, because they would react on specific things differently. Okay. Yeah, brilliant. Okay, so that's for oil. Let's go to gold a little bit just to give us a bit of an idea what's happening with oil. Okay, we've drawn a pattern here. I'm showing you guys gold on the weekly chart, XAU versus the dollar. And as you can see, we have drawn a bearish geometric pattern, a geometric ABCD pattern. And that has actually given us a hint that the D point could potentially reach at a 1646. It hasn't done that yet. It came down to an area that is quite significant with support at the 1670 to 1671 area right there in blue. It went there, it actually reversed and went up. Now it's still on the upside, but it may actually battle or find reversal at the 50 EMA, which is really very close. You see that the wick is also very close to the 50 EMA, and that 50 EMA area is also the previous support, which is the AB level of the geometric pattern. So that support could potentially be resistance as well. So we are watching this level quite well. So I want to mark this level as well. The opening price of the, just maybe to make it a bit thinner, give me a second. So here, for example, we have got opening price at the B point area there, the support area. Opening price there, 1786.03. And then we've also got the wick things around there. Now that's bang on the price now, actually, which is 1762. Okay, so yes, it could find resistance at any moment of time, even now, because it is actually on the wick of the support, the wick there, which was on the support at B point, and it could also choose to reverse at 1786.03 as well. So I would think that it is very close to reversal, but let's also check whether we have got this divergence based on the stochastic here as well. So okay, confirm that, put your stochastic on, and you can see that so far no divergence yet on this movement. Let's go on to 4 hour. Maybe a little bit here, yes. So on the 4 hour chart, which technically means 1 hour to 4 hour could actually see some reversal. So that's probably why it's actually happening. But maybe a continuation of the trend, move upwards, maybe reverse a little bit. We don't know that yet. But for now, it may actually be showing some potential of reversal for gold. So you need to watch that out. And that does actually mirror with what's going on with the USD, and USD is said to be recovering as well. So then we've got continuation for gold to the downside, but we have got recovering, a reversal of USD to strengthen and go to the upside. So that is for gold. Okay, so we want to watch that out with the levels, especially 1786.03. If it does go beyond that, then we have got more reasons to monitor it further for uptrend purposes, but now not yet. Now it's still too early for uptrend. It's probably biased to the downside much more for gold than to the upside. Okay, because now what the market has created is a sense of false belief to the traders as well because of yesterday's appreciation of price. So some traders are getting into the stubborn mode of not wanting to close their losing trades as well, because they think that it will actually go up more because it's a change of trend now in their minds because of the movement yesterday. So sometimes in the psychology of traders, when they have actually suffered a lot of loss already and they want to catch up, and then they've got a trade, like for example they are buying gold already since yesterday and all that, they have actually gone quite well, and then now it's going into loss, let's say, they wouldn't want to cut their losses early because they believe that price will go up again because it has gone up a lot yesterday. So now it is time for it to just do a bit of a reversal and then it will go up again. So this kind of thought pattern would mostly be out of desperation as well. So you want to really watch your mind when it comes to this kind of situation, okay? Because we need to be logical onto the chart itself. It's giving us hints already that it's more biased to the downside, not biased to the upside. So even though it would actually be going up after you close your trade early, it will still be a financial decision that is much better at that time, okay? Because we would have limited the loss. Even, it went to the direction, but at least you have limited your losses, because how would we know then that it would actually do that? There is just no 100% of knowing, okay, of that. So here you go. We have got the thing to keep traders aware is that for gold, we have got a double bottom pattern right here. We've got double bottom, the first bottom here, second bottom here, and that is a sign of a bullish recovery of prices. Okay, so it has actually been quite strong as well, and going up after that double bottom. So we want to look at how long this double bottom is lasting as well. So we want to keep aware, be very aware of both reversals, whether it is from the upside down or downside up, because we want to look at whether or not we see a reversal around the 1786. That makes a lot of sense, mainly because we have got the 100 and the 200 exponential moving average right there as well. So we want to be really careful with gold. Okay, so let's take a look at, I think, GBP AUD first and see whether we've got any potential. But before that, GBP CHF looks like it is following the sharp pattern at this moment of time. So the sharp pattern looks quite good at this moment. So this is on the daily chart, but we have drawn the sharp pattern some time ago. Now on price wise for GBP CHF, this is on a daily chart. Now it is actually proving very nicely that it is actually going downwards. GBP is just very weak at the moment. So let's also look at the Forex early warning heat map right here. Let me refresh that and let's look at GBP. I prefer looking at GBP and GBP CAD and Euro GBP as well, mainly because the arrows have just come up right now. That means we've got arrow down on the Asian session, arrow down. Oops, a second. Sorry about that. Let's just try again. Okay, it's a bit of a connection issue there, but okay. Not too bad. GBP CAD as well as Euro GBP. We want to take a look. As far as I know, it's got both arrows down there. So we'll look at GBP CHF first, and then we will look at the other two pairs. So as of now, on trading opportunities, I think we would be looking at more selling, and the price for selling for GBP CHF could potentially be at 2640. Okay, so you can sell at 2640, and you want to take about 20 to 30 pips on that one. So you want to exit 2610 or above. It's entirely up to yourself, but you want to take you want to sell at 2640, and you want to take profit there. So I'll just do a trade as well and take profit. Let's say 1.26, let's say 15 perhaps. Okay, 25, and the upside right there. 61.26, let's say 85. Sell the market. Okay, I've just taken it a little bit earlier right now, and I'm taking the risk basically, but the ideal selling price would probably be at 2640. So you can do a pending order selling at 1.2640, take profit at 1.2610. So this is a nice trade, a nice sharp pattern, not too bad as a price pattern, not really a very nice sharp pattern, but it is following through at the moment because of the fundamentals, because of things that are driving the GBP downwards. Okay, so that could be on the COVID side of it, the economic releases, data releases, as well as the economic situation or business situation in the UK, because they have open pubs and everything up and running at the moment, outdoors and everything, but they're also very, very cautious with certain things. So it's not 100% rosy picture of what's going on. So I think that is reflected into the GBP as well. So we've got a bit of a selling opportunity right there, a little bit. Then once it has actually gone under lower this area right here, which is 2580 psychological level and under, then I think we can actually see much more movement to the downside. So starting price of selling should actually be second round 2570 and under. Okay, so and that could actually then give you indication of mother candles as well on the left. So you want to always look to the left, and you want to see that, you know, your support area at 2410 should also be your exit area, because it's also opening price of some major bullish candle. Okay, as you can see here as well. All right, so that's for GBP CHF. Let's very quickly take a look at GBP CAD as well. So GBP CAD, the way I look at it, we've got a lot of selling opportunities for GBP crosses, but you want to pick the right ones as well. In terms of trend, I'm not sure on Forex early warning, just got a bit of an issue here. Maybe the site is down. My internet seems to be okay, but I think it's the site's down. So this is what I mean. You should never be panicked with one of it going down in terms of the heat map, all you need to do is go to an alternative one, double check that, and then go onto your chart and get a better idea of the trend itself. Okay, so here, for example, the GBP Euro has just turned into very bearish. So Euro GBP on the upside, GBP AUD as well. So let's take a look at GBP Euro GBP first. I think would probably be much better. So let's take a look at Euro GBP. Let's go to Euro GBP, and Euro GBP is giving us the rise in prices now. So it is actually going beyond that support area right there, respecting a lot of support area, going past it already. So giving us hints of upward movement or trend. Now, the other thing as well is that this is just a daily chart that we're looking at, and it is showing downward trend, in terms of the three lines, but then there's a new trend, looks like it's moving upwards. But we want to also mark the area where the 100 EMA is, because that's the closest area right there. That 100 EMA area is very close to the 8750 area, and as well as the 8720. Now it's at 8717, very close to 8720. So we want price to go beyond at 8730, which will probably be your buying price if you're looking at buying Euro GBP. So it's better to look at how price reacts to the 8720 psychological level, but your buying price preferably to start at 8730 onwards. So I will mark the 8730 number, which is 10 pips above the psychological level of 20. So 8730 right there. Okay, so we want price to go beyond the 8730 first. Now, if it goes beyond 8730, it goes above the 100 EMA as well, then you've got a better stand of prices, better stand of the trend itself. Okay, so here, let me just go on to the weekly chart. Go on the weekly chart, get a better picture. Now here, if we look to the left for the most recent bullish mother candle, we've got one very strong one here, most recent, and then followed by the one previously, even stronger than that. Okay, and then if we look to the left, there is a couple of others as well, but these are the area of reference that we need to look at. So that basically means that if it goes beyond 8720, beyond, or even better 8750 and above, we may have a potential of price to actually mirror the movement of these mother candles. One is to reach up to the level of 89.34 area, or a little bit higher based on this mother candle right here, which is 80, which is the 9,000 area. Okay, so we have got two options, but then we take this recent ones right here, we get rid of that one there. Now that distance itself, from 87.30 area right to the 89, that's 200 pips there, which is really nice. So what I would then do is to actually give it more time to marinate the upward type movement for the euro versus the GBP by monitoring the 8760 area as a potential entry price for a buy. So you want to look at that. I'll change the color to blue. Okay, go. So 8760. We've got the 89. We want to also look at how bearish candle has actually fallen. We've got one that has fallen a little bit earlier. The opening price of the mother candle was actually here. Okay, it's actually here, which was at 89.12. Now 89.00 would be your psychological level. So I would think 88.90. Let me just put the price. 88.90 would be a better price of exit, okay, for this trade. So you can actually look at pending order for buy starts at 87.60, a little bit later, but it's safer that way, just so that we get a clear through trend as well. Because once it has actually gone upwards and gone beyond 87.60, then the positioning of the three EMA lines may actually change as well and go upwards. If it does, then it wouldn't actually create the resistant area right here. Okay, so here, for example, when we minus the net opportunity, the net opportunity would actually be 131, not 200 pips anymore, mainly because we have minus the risk, the potential risk side of it there. So this is your area of trade. Entry at 87.60, exit at 88.90. So that's 130 plus pips, right? So then you want to double that as your stop loss as well. So you need to have at least 200 pips, 150 to 200 pips as your potential stop loss. Okay, so you want to really look at that potential stop loss as your willingness to lose how much in terms of your per USD per pip as well. So if you are if you need to put in your stop loss at 200 pips, obviously you don't want to trade one lot because that is 2,000 you're willing to lose. Okay, so $1 per pip, $2 per pip, is entirely up to you. So then you know that, okay, if at all I lose this trade and this trade didn't go my way, then I'll be losing 200 or 100, entirely up to you, but you need to choose that amount and stick to it. But you need to apply your stop loss for that. Okay, so that's Euro GBP. Okay, now next one and the last pair, we've got GBP. I think it's GBP AUD that we need to look at as well. So we've got lots of chances, I think, opportunity for selling on the GBP because it's got a lot of market participation into GBP. Trend is clear, market participation is building up. So maybe that's the, these are GBP crosses will probably be your opportunities for next week as well. Okay, so we want to also check the economic calendar. Let's take a look at FX Street as well, just to take a look at whether or not this whole marathon for GBP crosses would actually go next week as well. So here, Monday 19th, Thursday. Okay, this is good news because Thursday we are expecting loads of GBPs, very high impact news, especially it's got to do with the employment rate right there, claimant count right there as well. So this is very, very important from the National Statistics Department as well. Number of unemployed people, so we want to show that as well. That's very important. And then we've got Australian dollar as well there. We've got GBP, basically very important, high impact. Then you've got your ILO unemployment rate, you've got your claimant count. So these are very, very important, and it's very connected to the current economic situation and the impact of the COVID as well, and various other things. So we can see that it's got lots of volatility. So let's monitor GBP pairs from now on until next week. I think it's going to give us a good indication. So we will wrap this up as well on the fundamental side of it, and then we'll do the GBP AUD as the last technical analysis that we do. Let's just look at the dates. It will be Monday starting the 19th up to the 23rd, Friday. So there you go. We will do that. Monday 19 to Friday 23rd. Okay, so got all that Tuesday, and it looks like from Tuesday onwards you've got all these higher impact news, and I think volatility would probably rise up as well. But I think Wednesday we've got a very long list of data, so midweek onwards when we are doing the Wednesdays midweek webinar for Bretton, I think it would probably give us a lot of hints on all the commodity currencies, especially, but with regards to Canadian dollar from midweek onwards. But then we are seeing GBP as well on Wednesday. So we've got a marathon of high impact news starting from now impacting the UK. We want to look at news as well of the UK ongoing in the weekend as well, so that we can see that it will create a good marathon for us in terms of volatility for GBP crosses especially. Okay, nothing there for GBP, I think on Monday, but it's definitely going to be impacted by all these ones. So Monday onwards, of course, traders would start to monitor the market, but then volatility will kick in from early Tuesday itself, I would imagine. So or even late Monday onwards, because Tuesday itself, you've got that high impact news already starting for GBP. Then we can see loads of other GBP news as well. Wednesday, which is great. We have got the consumer CPI, very important, and CPI for the UK. We've also got the Bank of England governor speaking on Wednesday as well. Again, very, very high impact. Then falls on Thursday. Thursday, we don't see any, we see only I think medium impact news for GBP as well. But then we will see the rise of euro. So euros trading opportunities would probably rise with its volatility from Wednesday night onwards, because Thursday we have the ECB interest rate decision, deposit rate decisions as well, and they are high impact news. And then we see Friday as well will be for the euro as well, because we see a lot of German news, and we also see the PMI, market PMI for euro. They are all high impact news. And we also have until Friday next week, high impact news for the GBP as well, which is your market services PMI. So I think we've got lots of opportunities. So we need to actually scout that through and try to look at short term to medium term as well, but then to marry that up with the fuel from the fundamental side of it. Okay. GBP AUD, let's do that. It's the last one right there. Now, as you can see on the daily chart, trend is not that clear, reflected by the three EMAs, but candles are under all the three lines. Let's go to a lower time frame on the 30 minutes chart, and we can see that it has actually built that downward momentum quite well, GBP, okay, versus the AUD. Now, when we put the ADX itself, it has picked up and gone above the 25 very slightly on the 30 minutes. So which actually means that the strength of the GBP's bearishness has actually risen. So it's more and more bearish. Let's compare that with the 1 hour. 1 hour is showing the same and is really good on the ADX as well, above 25. Everything is very clear and very nice. It is at 77.52 at the moment. So I need to monitor the 77.50 psychological level. Okay, so we want the 77.50 psychological level for GBP AUD to be monitored. Okay, and then we compare that to the 4 hour as well. Now, 4 hour, not too bad, but in terms of the three lines, in terms of the candles, they are definitely moving to the downside. It shows you a lot of higher, a lot of lower, a lot of lower highs and lower lows. Okay, but then it's very close to some very significant support as well, and that support level is mirroring the 77.50 psychological level as well. And what's happening now at the 4 hour chart is that candle is showing me a longer wick to the downside. So what does that mean? Maybe weaker to the downside. Maybe it wants to reverse. There's a reversal that is actually due. So what we need to do then is to look at, so this is clear downtrend there. So we go on to the oscillator and apply the stochastic, no change needed for the parameters and all that. And we look for divergence, whether or not there's divergence. Now here, ADX is showing us on the 4 hour chart, very strong trend. What's the trend? Downtrend. So the downtrend is really strong. It's way above 25. Daily chart, it's just about to, okay. But the 4 hour and the 1 hour, I think it's just showing us, okay, it's about to pick up the 1 hour as well. It's only within the midterm. It's showing you that upward type momentum and strength of the downtrend. So we get rid of the ADX. We look for divergence. Now, here, for example, we have a bit of a divergence. Why? Because we have got a low here, and to the current price, that is a downward slope. And then from that reflecting that bottom right there is this bottom here, okay? And that bottom to this bottom is also a bit of a downward slope. Give me a second. Right, we have, give me a second. We've also got, if it is on this area right here, no, it's not a very clear, it's not a very clear, it's not a divergence as yet. I think we need to go on to the 1 hour chart. Give me a second. Right. On the 1 hour chart, sorry, is the divergence. So here, for example, we do the same thing that we did. That's a downward slope from the low to the current price area. And then that mirrors that, but that is an upward type movement. So on the 1 hour chart, maybe not so much on the midterm, but maybe there's a slight reversal happening very, very soon, which basically is already happening. Okay, so that downward move is experiencing that upward type movement with a single candle at this moment of time. Now, that candle and the 4 hour is signaling the weakness to the downside as well. So I think it is actually happening at the moment, a little bit of a reversal first. So we want to take a look at how far this reversal is going to go to. Okay, and to the left, you see the mother candle here. Okay, we've got one mother candle there, but if we go to the left on the 1 hour chart, we want to take a look at whether or not in the past at the current price has got a bullish mother candle. Okay, so we want to look at how far could it potentially reverse at. So I don't see very, very long candle, but there is one, I think maximum would actually be this one here, and would probably go there, 7800 area. This is 7750. So you've got about 50 pips or so. Okay, so in other words, it could probably rise 50 plus pips or so. There is a potential, and then make that reversal there potentially. So this is the worst case scenario. But the buying price basically took place only opening price at 77.56, so above the 50. Now we are coming lower to 77.50 area, but if it goes under 77.50, then you know that it wants to go down much more for the GBP AUD. So it's probably best to monitor price and look at how far it would actually be going down as well. Okay, and then you can take that selling type pending order at 77.40, and then we want to look to the left and look at daily chart as well and see where can you actually exit. So as it comes downwards, you've got an ending of a bearish candle right here, so that could also give you your exit potential right there, which is 76.32, maybe 76.60 would probably be better for you to exit. Okay, if you're looking at selling, you look at selling at 77.40, then your take profit 76.60. Okay, let's see, change that to the red line there. 77.40, 77.40. There you go. So you've got 77.40 as your potential pending order for a sell, and then you want to look at the potential is about 80 pips or so, and by taking profit at 76.60. So 80, you want to double that for your stop loss, or at least about 160, 150, 160 for your stop loss. Okay, and again, you want to measure that with your risk appetite as well, and to know how much are you actually trading with per pip value. Okay, is it $1, is it $2? All that does actually depend on how much are you willing to lose on the stop loss level. Okay, stop loss amount in pips as well, very important. All right, guys, I think that's all I have for you guys. Any questions at all? Mr. Kunan, any questions? All right. I think we're okay. So any questions at all, you guys can reach us at our Facebook page as well as our main website itself, or even at to make comments and feedback and get our attention at the at our Bretton Financial Trading YouTube channel as well. Okay, guys, with that, I want to thank you for your time and wishing you guys a happy pipping week so far. It's not ended as yet, but then hoping for you guys to make lots of pips by the end of this week, at end of this trading session today, and also to see you guys next week. But meantime, enjoy your weekend and have a very good weekend. Take care, guys. Bye bye.